Welcome to the WealthTech Winners Circle Podcast. In this podcast, we break down the technology challenges that are impacting today's financial professionals. Our goal is to identify these challenges and potentially uncover solutions across tech integrations, adoption, emerging technology, evaluating solutions, and more. Through this content, we hope to help professionals avoid common pitfalls and move their services towards an award-winning strategy for 2020 and beyond. Hosted by Tim Welsh, President, Nexus Strategy, and consultant to the Wealthies.
Hello, everyone, and welcome to the WealthTech Winners Circle Podcast. Joining me is Aaron Klein, CEO of Riskalyze. Aaron, welcome to the show. And to get us started, maybe tell us a little about yourself, what Riskalyze does, how you guys help advisors, and then maybe a fun fact or two about yourself that our listeners may not know about Aaron Klein.
Awesome. Great to be with you, Tim, and thanks for having me. It's wild. We're about to cross 9 years that we have been in existence as a company, and it's been a wild ride. Hard to believe that we're approaching the end of the first decade, but it has been a wild ride since we started Riskalyze back in 2011. The company really got started around the idea that risk and investing is something that just felt very impenetrable to the average person. It felt very broken to the average person. It was hard for them to grasp and understand kind of how markets work. And it's very counterintuitive how markets work, right? Because I think Warren Buffett probably said it best. Investments are literally the only thing that the American consumer refuses to buy when they're at their cheapest and only wants to buy when they're at their most expensive, right? When markets are going up, we're feeling excited and optimistic, and we want to put more risk on and put more money in our accounts. And when markets are going down, we start getting fearful and making bad, fear-driven investing decisions that ultimately are selling low. And then we just wait for the markets to feel safe again, and then we buy back in at the high. And it's just we have a remarkable capability as humans to sabotage our investing. And so Riskalyze was founded on a mission of empowering the world to invest fearlessly. And it was our belief that, hey, if we can use this Nobel Prize winning economic framework to build some technology that allows an advisor to create a framework for their clients to really understand and react to risk appropriately, that can transform a fear-bound investor who makes bad short-term decisions into a fearless investor who makes really great short-term decisions. And, great short-term decisions are the foundation and the fuel that amazing financial advisors use to actually achieve those long-term financial goals. I go and speak to, audiences of advisors, and I will kind of ask a trick question sometimes and say, how many of you help your clients make great long-term decisions? And a lot of the hands will go up, and I'll say, so I hate to break this to you, like none of your clients make long-term decisions. The long-term is your job, right? All of your clients make short-term decisions, and we exist to really help financial advisors get their clients to make great short-term decisions, because that ultimately is what amazing financial advisors use to achieve those great long-term financial outcomes. In terms of a fun fact about me, man, you're stumping me, because my hobbies are like Riskalyze and then my family. I do a little bit of nonprofit work, but I will say this, my family looks a little different from most. We've adopted 3 times. My first son was born in South Korea. My daughter was born in Ethiopia. And then with some nonprofit work in Ethiopia, we met what turned out to be our oldest, who was born in Ethiopia. So we'd like to say we're just your typical average Korean, Ethiopian American family.
That's fantastic, Aaron. Very inspirational. And I know you do great work there in spreading the good news about those options. So congrats on that. 2019, big year for you all. You took home the Wealthies again and again and again. I think you pretty much own the risk category. So what was the thinking behind last year's nomination and the initiative that you won with?
Couple things that I think we worked on and rolled out and talked about. I believe the Wealthy in the risk category was focused on the all-new Riskalyze Experience. We rolled out a complete top-to-bottom user experience redesign and really kind of upgraded the experience for advisors. We also rolled out the next-gen risk assessment a little bit later in the year. And that was just kind of, internally the code name was RQ6. We've literally been through 6 different iterations of the risk assessment, but we just continue to take the amazing data that we produce from all of that and the input from great advisors and try to refine and make it even simpler and even more powerful while still respecting the underlying math and methodology that has powered us to the place that we're at today. And another big initiative for 2019 was our connected trading technology. We rolled that out in the fall of 2019. And connected trading is all about, we built this trading automation platform that kind of reinvents how advisors trade. And connected trading kind of built out the last mile of all those integrations into back-end custodians, so the advisor can literally click a button. It shoots all the trades out across the network, fills those trades, gets them allocated out to client accounts in a compliant, fair way. And all of that happens under the hood, so the advisor just gets to watch the process happen in real time. That was a lot of stuff that we rolled out in 2019. I'm sure there were a few more that I'm not thinking of off the top of my head, but it was a busy 2019, and we've got an even busier 2020 planned.
Yeah, outstanding. Yeah, definitely a busy time for everyone, I think. So let's talk bigger picture. We know advisors are always wrestling with technology. I love people who call it the tech stack. I kind of think of most of them think they have a tech pile, but yeah, that's kind of a phrase I heard from a good friend of mine, and I've been leveraging that because it really is a good descriptor. So what are the challenges for advisors when it comes to tech? And on the flip side, what are the opportunities? Maybe what are they missing? Because I know you're knee deep with advisors on a daily basis.
Sure. There's several things come to mind. One is that advisors are dealing with, what I like to call liquid expectations, right? So Apple and Netflix and many of these different companies that really, didn't exist 15 years ago, at least, the products that I'm talking about there, right? Like the iPhone arrived in 2007. Netflix really began to change everything from a streaming perspective, kind of in the middle of that decade. And these kinds of products and experiences have absolutely changed how consumers think about and what they expect from service providers. It was just not that many years ago that if we wanted to watch a particular movie, like we really needed to plan ahead, right? And we really needed to make sure that we had our DVD there, or that we had time to go to the rental store, or any of those kinds of things. And, now we live in this on-demand world where we just go like, what do we want to watch? Like all of that is at our fingertips right there, at the touch of a button. The same thing has happened with mobile, right? Where it's hard to believe that 15 years ago we would say things like, well, when I get back to my computer, I will figure that out and I will get back to you, right? And today it's like all sitting in the palm of our hand as we walk around. Pretty much anywhere on earth. And so like those kinds of shifts in expectation, I think impact advisors in a big way as well, because their clients just have this fluid change in what they expect from them as advisors and what they expect from the technology experience. And so I think it's incumbent upon advisors as they're figuring out how they want to transform that tech pile into a true tech stack. I think it's incumbent upon advisors to really think about design as a core element and experience as a core element of what they are choosing. I think sometimes advisors, are very, very focused on kind of checking the feature boxes. And, checking the feature boxes, I guess I would say that a lot of the user experiences in successful companies of today are in a less is more philosophy. And it's not necessarily about, do you have these 250 features? It's, can you deliver an experience that really makes a difference for me, and in the case of advisors, for my clients? I think that's one of the biggest technology challenges that advisors have to deal with, is to really change their lens of how to think about what a successful technology implementation is going to look like for them.
Yep, totally agree. I think you're right on to that. And you actually covered some of the points of my next question around the client experience. And so along the similar veins, maybe a conversation about a topic that I've termed peak Robo. Have we hit peak Robo in that, advisors are comfortable now that they're not going to be replaced by the robots? can they exist together? What are your thoughts on that concept of peak Robo?
Yeah, I recall saying a year or two ago, I believe Robo has jumped the shark, which of course is the old term for when a television show is no longer any good and we're all ready to move on. There definitely was this Robo craze, right? And I would agree with you. We reached peak Robo, we're past it. And I think the industry has gotten over that initial angst of robo advisors. I think that you've got to kind of put all of this in context, and really, like, robo advisors is just not a great name for it. What these companies actually built were self-directed investing services. And in reality, what they did is they really disrupted like self-directed brokerage accounts, right? Because it's not a great experience. It may be a little bit cheaper, but it's not really a great experience if you don't know anything about investing, and you're trying to figure out how to invest $25,000 to open an E-Trade or a Schwab or a TD Ameritrade retail account and just ACH your money in, and then you go, well, gee, what should I buy? Like, I just need to buy. I know I need to be diversified. I guess I need to buy 10 different things. What should I buy? And then I got to pay per trade. So that's incentivizing me to buy fewer things. Of course, now the transaction fees are gone, but that's still just somewhat impenetrable. And so a self-directed investing service is one that, I've always looked at it as like an Amazon Prime button that executes 10 trades at once and kind of tells you which things to buy to have a reasonably balanced portfolio. That has value. I think the jury is still out as to whether those businesses can be profitably built, because the problem is you're dealing with clients, the clients who are willing to use a self-directed investing service don't have a lot of money, and you're charging a basis point fee, and you're basically saying, well, we can't charge 1% because, they can go get an advisor for 1%. So we got to charge 25 basis points. I just think that the business model for self-directed investing services has been really poorly thought out. So I'm not sure that they can be grown profitably. But what's very, very clear at this point is that they don't compete with real financial advisors. Everybody gets to a point where being self-directed doesn't make sense anymore. And I've always said that I think that you kind of cross that Rubicon when things get very complicated. People reach a point where their taxes are complicated, and they know that they're losing money by doing, by not structuring their investing the right way, or not setting things up in the right kinds of account structures or tax structures or trust structures. There's all kinds of complexity around that. And then there's the fact that things are very, very important. And when something is complex and it's important, I really don't want it to get screwed up. 1% or whatever the advisory fee might be starts to look really, really small. I often tell the story about how I got stuck at the last minute without a CPA and tried to do my own taxes in 2017, and got out of that mess by hiring a CPA a year later, who proceeded to go back and charged me a pretty penny to amend my very poorly done self-directed tax return from 2017, right? Because I was trying to do it myself on TurboTax, and lo and behold, they got me back a multiple of what their fee was. To get that right. And it just proved the value of real advice. I think that advisors need to be more confident in the value they deliver and the fees that they charge. I'm a little bit of a contrarian on the whole fee compression argument. I think that fee compression absolutely exists at the asset management layer. I think that it's really, really hard to find advisors who are struggling to keep clients because their clients see and know the value that they deliver every day. And I think advisors need to have more confidence in the value that they're delivering.
Yeah, very well said. I think you're absolutely right. When the cost of being wrong is extremely high, that's when you want to bring in professionals. So
exactly right.
Completely agree. And somewhere in my background, I had the same tax situation. So I appreciate your comments. Let's dig into some more buzzwords. AI, artificial intelligence. Love your thoughts. I know you guys might be working on this, so if you could share some insight there. But, have we not reached the point yet where AI and big data can make a difference in an advisor's world? Or are there use cases now where AI makes sense? Or is it still just a buzzword? What do you think?
A couple years ago, I would have said that the only true deployments of AI in our industry had been in press releases.
That's fantastic.
But I think that we are starting to move into an exciting era where where a lot of interesting applications are opening up. I would point to Redtail, for example, and what they're building around AI in CRM data, right? To kind of surface clients that are potential issues that you need to reach out to them and chat with them about things, or just finding meaning deep in the data that's in your CRM to say where are the soft spots in my business, where are the areas I need to focus on, where are the clients I need to be thinking about or very responsive to. I think that's super interesting. We've got a bunch of projects internally where we're thinking about how to leverage kind of AI frameworks. AI as a service is starting to become a really interesting piece of technology that we can leverage. So we're not in a position where we need to hire AI engineers and try to build AI frameworks from scratch. We can now, feed lots of data into AI frameworks that exist and kind of leverage AI as a service. We're playing with that in the labs on a couple of different levels. I think that it's really interesting to think about what happens when we can, for lack of a better term, pre-make some decisions for advisors. I don't think we want to take decisions out of the advisor's hand, but imagine, for example, that in the future you might be able to come to your autopilot trading dashboard, right, where you've got 35 decisions that you've got to make for your clients. And the factors that go into those decisions about do I want to go ahead and approve these trades to kind of rebalance the client back to their model or this, that, or the other. A lot of those decisions could kind of be pre-made. There's a default and you're just approving the default instead of you as the advisor having to necessarily think deeply about each one. How do you get really intelligent about pre-making that decision for the advisor? Well, AI could probably, for example, uncover patterns in the data about whether this client is, extraordinarily tax sensitive or is extraordinarily risk sensitive. Because a lot of the decisions that we make about whether or not to rebalance a client's account is about an advisor kind of making a judgment call about whether this client is more tax sensitive than they are risk sensitive, for example. We might be able to use patterns in the data to help the advisor kind of pre-make that decision and see this client appears to be a little bit more tax sensitive. Maybe we talk to the CPA before we engage in this rebalancing action today. That's one example. I think there's hundreds of different examples where we've seen throughout our product and throughout other things that we're building for the future, where we might be able to kind of pre-make decisions for the advisor and show them an intelligent default. I think that's one of the most exciting ways that I could see AI, stripping minutes and then hours out of an advisor's day by just making them way more efficient and able to make decisions very, very quickly.
Yep, I think that's a great perspective. It seems like every day there's another announcement around a big merger acquisition. You see custodians buying custodians. You see broker-dealers merging with other broker-dealers, tech companies being acquired by legacy players. New money's coming in. So what's your perspective on all that? What should advisors be thinking about as they select their partners?
Yeah, I think I've got a little bit of a contrarian view on this one as well, because, I've read a lot of articles talking about, consolidation is on the rise. To some extent that is empirically true, right? You can count the number of transactions and it's true. There are more transactions happening right now. There are also just more companies. And to some extent, I feel like this is just the circle of life, right? So what tends to happen in this circle of life is that, companies are founded and they grow and they've got a really great core idea. And this can be a broker-dealer, this can be a custodian, this can be a technology company. And they get to a place where it kind of makes sense. The number one reason, by the way, that companies sell to another company is because the founder or head of the company or whoever is kind of tired and is ready for the next thing. So I just find it kind of interesting because I think it's a bit of the circle of life. And every time there is consolidation and some of these acquisitions, what does it do? It actually opens up space for new innovation and new companies to get started. And so I think that will kind of ever be. And I think that's a great thing. I think that when companies get acquired, it opens up room for new innovative players to kind of come in. I think to some extent that's when we came into the industry 9 years ago, we had a really core vision of how we could make investing better for people. Turns out that we were able to kind of invent a new pillar of advisor technology in the advisor tech stack or pile, whichever way you want to think about it. And so I would say that like our inflection point wasn't necessarily somebody else's acquisition, but now let's look over at the custodian space. And there's some really interesting up and coming firms that are rolling out some really innovative services. I would look at Altruist. I would look at Apex. Even more established firms that are doing some innovative things like RBC. Trade PMR, interesting companies that are kind of up and coming and able to grow because, this transaction with Schwab and TD is going to do some consolidation, and not every advisor wants to work with a very, very large custodian. A lot of them will. And it's just kind of the circle of life. And I actually think it's a healthy thing for the industry.
Yep. I think you're right on track with those thoughts and comments. And I think it also kind of brings up that changes amongst us constantly. So speaking of that, year 2020, a marketer's dream, clear vision.
Yes.
From the Riskalyze headquarters, what's sort of the vision for 2020 for what you're going to be bringing to market and what you're focusing on?
Yeah, we've got a very aggressive roadmap this year to accomplish a lot for the advisors we serve. There's a lot of focus on kind of our core. We are, we're simultaneously. Not too long ago, the T3 tech survey came out, right? And the headline was that Riskalyze is pulling away in the risk alignment space. That's a great headline for us, and we appreciate it. But we're really focused on the fact that we only scored 30% market share because basically there's about 65% of the market that isn't doing anything around risk. So we think that's a huge opportunity. And one of the biggest things that we're focused on in 2020 is like, how do we innovate to continue to deliver value to the massive lead of advisors that we have the privilege and honor of serving today? And what do we need to do to convince the other 65% of the market that they should come aboard and build risk alignment into their practice and how they serve clients? Because obviously there's some things that we can do to convince them that this makes sense, like it makes sense to the tens of thousands of advisors that we serve today. There's a lot that we're going to ship this year in regard to our trading product. Can't speak too much about that yet because it's still a coming surprise. But there's a couple Wealthies in our future that we hope to win from some of that innovation as well. And just a lot of, I would say we have a core principle of focus. And we define that as we don't want to build everything and try to be the be all end all, like we build every single piece of technology that an advisor could ever want or need. We're going to focus on knowing our DNA and building what we're really good at. But we want to make a deep impact on advisors rather than, kind of trying and failing to boil the ocean and being mediocre at everything. And so that's certainly our strategy, our focus. And there's a lot that we expect to deliver in 2020 along that vein.
Well, fantastic. Just in wrapping up our conversation, the Wealthies are coming up in the September 2020. Yes. We look forward to seeing you there. You've always been a perennial sponsor of the photo booth. I know it's a lot of fun. So again, thank you for your time today. And Aaron, really appreciate all that you do. And we will talk to you again soon.
Thank you, Tim.
This content has been made for information and educational purposes only. The views and opinions represent the views and opinions of the guest and does not necessarily represent the views and opinions of wealthmanagement.com.